Hey, this is Matt from InvestiQuant. Today is Thursday, October 1st, 2020. And this morning we saw the markets gap up sizably to start off the first trading day of the quarter. We had a quick pop off the open that reacted poorly to some news that came out around 9:45, and we saw some sellers step in aggressively. From there, we've gone fairly quiet, and we've kind of drifted a little bit higher. The S&P has kind of been in a consolidation pattern the majority of the afternoon. You can see the NASDAQ below has been a little bit stronger. It's made it back towards the highs, as has the Russell, which is over here on the far right-hand side. And the Dow on the bottom right has seen a little bit weaker action. But bottom line is, it's the first trading day of the quarter, and we are still up in all of the instruments so far. Some of them up noticeably, up above 1% on the day. So what I want to do this afternoon is take a look at what has happened historically as we head into the close, when it is the first trading day of the quarter and you are positive on the session. So let me set that up in Discover. I'm going to select all four instruments. We're going to use a intraday time-based entry, which will get long just for the last hour of trading. So I'm just going to scroll down here to the bottom and select 3:15 p.m. Eastern Time. It'll exit at the close, which is 4:15 p.m. Eastern Time. So this is just a long position for 1 hour into the close. For opening filters, I normally use something from here. I'm not going to use anything from here today, just because this is something that doesn't happen all that often. With it being first trading day of the quarter, you've got 4 options a year for it to happen, and I want to add a little bit more context around what has happened after the open as opposed to before the open. That way we can just keep as many samples as possible. So I'm skipping over that, coming straight down to post-open filters, and this is where I can say that we have a higher day forming here. And what I can do is I can say that the close as of 3 p.m. or 3:15 p.m. Eastern Time is above the prior day close. So if I just hit equals there for a greater than prior close, that means the 3:15 price is above yesterday's closing price. So that would make us have a positive session happening here. And then I'm going to go into indicators. And again, since I'm trying to keep as many samples as possible, I'm going to be just using above a 200-day moving average today to try to keep as many samples here. Lastly, I'm going to go into calendar. And this is where I'm going to find the first trading day of the quarter over here on active today. I'm just going to click on that to add it. And lastly, hit view results. And here we go. So these are the results of going long at 3:15 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when it is the first trading day of the quarter and you are trading above the prior closing price. So you're trading above the last trading day of the quarter's close. So you're starting the quarter off positively and you are above a 200-day moving average. Historically, dating back to 2003, the S&P has 35 samples, the NASDAQ 32, the Dow 32, and the Russell 30. And if we look at the win rates on these for going long at 3:15 p.m. Eastern Time, the S&P has a 60% win rate on those 35 samples, the NASDAQ 53%, the Dow 53%, and the Russell, the strongest of the group, 73% of those have closed higher than the 3:15 p.m. price historically. If we look at the average win and average loss, you can see for the ES, the average win is just a little bit larger than the average loss. Not a huge difference there. It's quite a bit larger on the average win here for the NASDAQ than the average loss. The average win is a little bit larger here in the Dow than the average loss, and the average win in the Russell is quite a bit larger than the average loss. So all of these do have larger average wins than average losses historically, and all of them are at least mildly favored, with the S&P and the Russell being a bit stronger. Let's take a look at the results distribution, and I've got the S&P here loaded, so this is the one with the 60% win rate and fairly even average win and average loss. So here's the results distribution for the S&P, and this looks pretty symmetrical to me. Very nice kind of bell curve shape going on here, where you've got one standard deviation here in the blue background, where the majority of the results are taking place. Looks like the most common scenario has been a small winner here. And if you look right here, dead center, this is the 0 line, so we've got a lot of small winners and small losers. Right next to that, the losses start dropping off pretty quickly after that small loss amount. The small win gets a little bit more sample sizes for a slightly larger win, and then they start dropping off. Not seeing any major outliers that stand out, so Nothing there historically has happened. But hopefully you found this helpful. Good luck the rest of the day, and we will see you next time.